Couple of minutes, we'll have ABS jobs figures out for the month of October. Craig James from CommSec joins us now live from Sydney. Craig, run us through what the expectations are for today's jobs numbers.
Well, Annalise, the economists around town are expecting job growth somewhere between 15 and 20,000. The participation rate remaining near record highs and the unemployment rate around about 5.2%. Remembering what happened last month for the month of September, what we had as job growth in the order of 14,700, pretty much near the average that we're seeing in recent times. The unemployment rate last month actually came down surprisingly from 5.3% to 5.2%, so around about 25 seconds, so away from the figures.
When we're looking at these jobs figures, are we expecting a breakdown of that full-time versus what Labor is calling underemployment figures? That's something that they've been quite critical of.
Yeah, certainly when we're looking at the job figures nowadays, it's not just a case of looking at employment and unemployment. It is a case of looking at underemployment and underutilisation as well. So the Reserve Bank is going to be looking at across all those measures. It would have been looking at very carefully to the wage data from yesterday, see if there was anything sort of new in that to update its thinking. So we've just gone past. We've had the first fall in employment that we've seen in the order of 36 months, or 3 straight years. So I suppose it had to occur, sooner or later. When you go for 36 straight months, without a drop, eventually, one had to come. What we've seen is the unemployment rate has risen from 5.2% to 5.3%. Full-time jobs down by 10,300. Part-time jobs down by 8,700. Participation rate was also a little bit lower as well, at 66%, so down from 66.1% to 66%. So just repeating, so the employment down in the month of October, down in the order of 19,000. Remembering, of course, that economists had been looking for job gains somewhere between 15 and 20,000. This, certainly comes as a little bit of a surprise to many around town. Had been expecting, job gains, but as I say, it's got to be putting it into the context that we've gone for 3 straight years with employment growth. We had to see a decline happen, sooner or later. One thing is important in terms of the job figures. Always got to remember that they're backward-looking figures, that employers 5 or 6 months ago made decisions about whether to put on workers, or not. So this is, very much a lagging indicator on the economy rather than a leading indicator. Unfortunately, some of the leading indicators of jobs have also been a little bit on the soft side. We'll have a look at the reaction of the Aussie dollar. There's the Aussie dollar. You can see the reaction. It's gone off the charts, in terms of the drop. So we have seen the Aussie dollar, fall quite substantially after the employment figures, have been released this morning.
Very alarming indeed. Now, you say that this is a lag of about 5 to 6 months. How much longer can we blame the election effect? We know that whenever there's a federal election, regardless of who wins, there's some hesitancy about putting jobs on, and we know that this election in particular, there were some big policy changes coming from Labor, who everyone did expect to win. Do you think that there is still that lag effect, or is it time to start saying that it's other parts of the economy?
Well, there's 2 effects that have been weighing on the Australian economy over this year. One effect has been weighing on all economies around the world, and that's the US-China trade uncertainty. That's seen a lot of investors, businesses, consumers and the like, holding back their spending intentions, their employment intentions, their investment intentions. So that's why we've had central banks around the globe cutting interest rates, including our own here in Australia. So we've had that US-China trade uncertainty. We've also had Brexit thrown in for good measure, that uncertainty. Here in Australia, there had been certainly a delay in terms of spending, or holding off in terms of spending and investment in the first half of the year ahead of the election. Now, it takes some time for employers to be able to embrace, the better times and start, taking, workers on. We do know that home prices are increasing. We do know that exports are increasing substantially. So there are parts of the economy which are very strong at the moment. So I think this is very much a backward-looking indicator. It is one that is going to keep the Reserve Bank poised to cut interest rates. We're not expecting the Reserve Bank will respond in knee-jerk reaction to these figures and cut interest rates in December. They'll want to look at a couple of more months in terms of figures. We've had 3 interest rate cuts, June, July and October. And it does sort of pay the Reserve Bank to be able to sit on the sidelines for a little while longer just to see what the full impact in terms of the market is. We'll have to look very, very closely today at the underemployment and underutilisation measures as well. But the top line, sort of figures on jobs, sort of not overly positive.
And just, you've already said that the Aussie dollar's going down. What kind of impact can we see going forward from this job figure number going backwards instead of forwards?
Well, what we have in the United States is the Federal Reserve indicating that they'll stay on the interest rate sidelines. They're quite comfortable in terms of their own situation in the United States. So no change in terms of US rates likely. Given these figures out today, the leaning will be here in Australia to further interest rate cuts. So what they're going to do is put downward pressure on the Australian dollar. Now, from the consumer standpoint, that's considered a negative reading. So when you have the Aussie dollar low, a lot of people feel as though so it costs them more to travel overseas or to buy goods from the internet. But we've got to remember, in terms of the Australian economy overall, it's a very much a positive indicator. The fact that we've got record trade surplus and record best current account surplus that we've seen since the 1970s owes it a lot to the fact that we've got that Aussie dollar so down at low levels. So that's certainly been supporting our economy and will continue to support our economy into 2020.
Craig James from CommSec, thank you for your coverage of that very unexpected result.
All right, thank you.